So we will provide this as a resource after the fact as well. So first and foremost, I want to thank Austin for being here. Austin is a financial advisor, and personally, he works with me, and I know a lot of others. So my name's Angie, and I own Living Inspired Within, and I'm here to provide valuable resources to women entrepreneurs, both on the personal and the professional side. So my goal is to help support and motivate women entrepreneurs, both from a mindset, goal planning, overcoming limiting beliefs, and overcoming imposter syndrome from that standpoint, but also for the professional side as well, and building a business, having clearly defined goals and dreams and a pathway to success. And part of that does include planning for retirement and knowing how to best utilize your business and how you can put money into retirement and plan for your future so that you can be financially free, which I think is a lot of people's goals. So with that being said, and I've worked with Austin for, gosh, a few years now. I want to say probably at least 3. And so I work with him. I've done some investing through my self-directed 401k, which we will talk about. And so I thought it'd be a great resource to bring him on to answer some questions. I was unaware that a self-directed 401k or even a self-directed IRA was a thing. I had no idea. And I think it's a great idea. And it has personally allowed me to invest in industries and in areas that I feel knowledgeable about and that I know about. So it makes me feel more comfortable in my investing. Personally, I like to diversify. So it's helped me a lot. So thank you, Austin, for helping me with that personally and professionally. And thank you for being here today and joining us. I greatly appreciate it.
Of course. I appreciate you having me here today. And I'll say first and foremost, I love to hear the mission behind the business that you're running, because I don't know if I've ever told you this. I grew up the middle child of 4 sisters. So I'm all for powerful women. I've grown up in that, and my wife included. But karma is a thing. Middle child of 4 sisters. Don't feel too sorry for me, because now I have 11 nephews, no nieces.
Oh, wow. Okay. So the pendulum has swung the other way.
It has swung. So
Awesome.
I can appreciate to hear that for what your mission is with that. I appreciate you sharing that with everyone here today. So
thank you.
Of course.
So what we're going to do is we're going to dive in. I have a couple questions I'm going to ask Austin. If anyone has questions, you can put them in the chat and I'll make sure we get to them. If not, what you can do is you can either send me a DM or I'll give you my cell phone number and email at the end, and I can either help facilitate questions if they're directed to me, or I will get you in touch with Austin to make sure we get those answered for you. So Austin, let's get started. If you can tell us what a self-directed 401k is for those of us that may not know what that is.
Sure. So it's got a lot of different names. You'll hear the term self-directed 401k. You'll hear the term solo 401k. At one point, they tried to coin the term uni-K. Realistically, what it is I still call it a solo 401k. So if you hear me say solo 401k and Angie say self-directed 401k, we're talking about the same thing here. But basically what it is it's a 401k plan for a sole proprietor, a sole owner of a business, that it's very similar to what you may think of a 401k through work. For instance, if you worked at a large corporation before. So let's say you've worked for Siemens in the past. Well, they have a 401k plan. I believe it's through Fidelity. You go to work, you get your paycheck, you put a little bit of your money into the paycheck each month or each pay period, and it slowly grows based 100% on whatever you put it into, right? A solo 401k or self-directed 401k, it's set up for someone that says, hey, I own a business, and it's really just me in the business, but I'd like to set up a 401k for myself. And what it allows you to do is it allows you to have a larger contribution into it and kind of invest into some crazy things that you might not necessarily be used to hearing about. I know we'll touch a little bit more on what that is coming up here in a bit, but For the most part, it's your normal 401k, but it's set up under a business that you own, giving you total control over it from A to Z.
Okay. So who is eligible for this type of investment strategy, and how would someone go about setting one up?
Right. So the people that are eligible, I like to think, as when I give an example, I like to give the example of someone that's a realtor, for instance. Not necessarily only because it's real estate agents, it's just that's the easiest example to give, right? They might hang their license with a Keller Williams or an EXP or a Remax, but they're self-employed, right? And generally it's just them in the business. So it's usually individuals that own a business, run it by themselves. So it's kind of just them in the business. They might have a part-time person. Maybe they have someone that's not considered full-time or eligible for benefits and all of that. But it's generally just them, possibly a spouse. Spouses are also kind of skirted around with that. There's a whole long explanation on that. But someone that's self-employed, they have to be paying themselves an income. So it's not just, hey, I went out and set up an LLC today, suddenly I'm eligible for a 401k by myself, right? You have to have earned income in order to put it into it, which, depending on who you ask, there's a lot of debate around that subject. A lot of people will tell you you absolutely are eligible to set up the plan, and you absolutely can have one if you go out and set up an LLC tomorrow. And I won't disagree with that. The problem is you're going to go through all of this, I shouldn't say this whole process, it's really not a lot, but you're going to go through the process to set it up, only to not be able to contribute to it and not be able to maintain it. And you're then going to have to do the tax filing for it, even though you don't have any income coming through that business. So you're not eligible to make a contribution into it at that point. So really it's self-employed people that are looking for a way to either start a retirement plan and get a larger contribution put into it quicker, or it might be someone that says, hey, I'm a self-employed person. Maybe I'm venturing out to start a business. I've worked in corporate America my whole life, and I'm just looking for something different to do for my retirement savings, as opposed to, hey, keeping my old 401k where it is, or just simply doing an IRA. So for the most part, if you're thinking, am I eligible for this? I'd start by asking yourself, am I self-employed? And if the answer is no, this plan's not for you. If the answer is yes, then we can kind of take it to the next step.
Okay. And I know that was my case too. You mentioned, someone coming from the corporate world and starting their own business.
Mm-hmm.
And so when I did that, when I transitioned from, or I like to say, when I broke out of corporate America jail and transitioned into running my own business, that's when we created my self-directed 401k. So I didn't want to just leave it in, it was housed somewhere, and I could just, because of the amount in there, I could just let it kind of go, right? And it's an investments, but I don't feel confident in my own investments, knowing stocks and everything that I should be doing. So what I did is I rolled it over into a self-directed 401k, so
Right.
that collaboratively, and correct me if I'm wrong, Austin, or if you see it differently, but collaboratively we manage it. So Austin manages part of it, as far as the investment side, and then I handle the more of the real estate investing side, which is what I'm comfortable with. Is that
Right.
accurate?
I couldn't have explained it better myself. I think that's the best way to describe it. And I really think that that's where most of the benefit comes from this type of plan, is that it gives you that flexibility, right? Now, someone that's just starting out and starting the plan from scratch, again, I'm not going to share anything personally other than you made it aware that you and I do work together, Angie. I won't share anything personally about you. That I'll let you do all of that here if you'd like. But basically, if you're just starting the plan out and you're starting from scratch, well, it might be kind of tough to get out there and say, you know what, if what you know is buying rental properties, for instance, right? It might be kind of hard to get out there and say, well, I just made a contribution of $3,000 into my solo 401k here, my self-directed 401k. I'm going to go buy a rental property. But you got to start somewhere. I think is where most people end up getting that gridlock, that fear of, you know what, I can't get out there and do immediately what I want to do today. So they end up saying, well, what's the point in starting?
So what else could you do with a self-directed 401k? So personally, as I mentioned, I like real estate investing. and part of mine because that's what I know and that's what I'm comfortable with. But if someone's in a different industry, or if someone is starting out and they have, maybe a minimal amount of contribution, what are some of the things that they may be able to choose to invest in because it's self-directed versus a traditional 401k?
I like that question. And I'd almost describe it as, not to go back to a previous question, but if I was the one to name this plan, I think I would just call it an alternative asset 401k or something along those lines. Because realistically, the IRS, when they come out and they dictate, hey, what can you own inside of a plan like this? They realized it's a lot easier to just tell you what you can't own as opposed to telling you what you can own. Basically, they say you can't do anything that's self-dealing. So I can't buy my primary residence inside of it. I can't lend money to myself. I can't invest into a business that I personally run. So that's one rule. You can't own collectibles. So that's going to be, artwork. It's going to be like classic cars, baseball card collections. I'm a total dork myself, and I have, from whenever I was a kid, I have Pokemon cards framed in my office over here. I couldn't own those inside of a 401k because they're considered collectibles. I couldn't own my guitars. Right? It's almost like, think of it as like a physical thing. It's kind of hard to determine the value for it. And that really opens the door then to say, well, they're telling us what we can't do. Depending on how brave you are or what you really know, we can kind of venture out from there. And rather than get into the nitty gritty as far as to the extreme of what can you own, I think the biggest ones that we generally see are, probably no shock, we see stocks, bonds, mutual funds, your whole equities and your fixed income piece. That's where I come into this. But you can also own things like real estate. You can do private lending from it, or you can invest into private businesses, for instance. So the biggest ones I see are, I think, those three from the alternative asset side. And the way that it kind of works is, and how Angie and I kind of work together in this case, to use you as an example, anything that's on the equity side, anything that's on the publicly traded side, I hold custody of that. So basically, as the financial advisor, I'm coming in saying, hey, we've talked about your risk tolerance, we've talked about the long-term planning, we've put the plan in place, and this is the allocation we're going to run with over here for some of your funds. But Angie, having knowledge in what you have knowledge in, you say, I think I can also do this over here. So those are the funds that she kind of holds custody for. So if she's going to go out and say, Angie, if you said, you know what, I want to go out and do a private loan and lend someone X amount of dollars and charge them Y%, she's able to go out and do that. Speaking as in she, speaking as in you. It just gives you kind of that flexibility to do both things. And there's not really any minimum to do either, right? If you can go out and negotiate someone to sell you a house for $10, first of all, I'd like to hire you as my realtor. But you could do that. Most people aren't. That's not really the case, but it's at least giving you the flexibility to do both. And I won't give exact numbers here because I don't want to give anything away with Angie from like a portfolio size wise, but there are certain minimums to work with me. But if for some reason you're just getting started out, I can help someone get something set up as a first time contribution, putting money into it with $0 to start.
That's awesome.
Yeah, so I can help people out on all of these lines. I have the connections for everything with different firms and everything along those lines. So I think
that's great.
Yeah,
you did. And thank you for that. And thank you for offering that, because I know, there are some minimums to work with you. And as people are potentially just getting started and they're either weren't aware of this or they're running their own business and haven't even, right. So it's like you're juggling a million things in the air. So maybe they haven't even thought about planning for retirement. But if they're just starting to contribute, I appreciate you offering, making the connections necessary to help people set this up, because it is important. So correct me if I'm wrong, but the difference between self-directed 401k and a traditional, as far as investing, is traditional 401k is more into stocks, bonds, mutual funds, where self-directed allows you more versatility, correct? And some
Sort of.
diversification?
Right. So I think you're
Or I guess
correct.
what is the difference, right, between
Right.
self-directed and
So
traditional?
you're totally spot on with what does it allow you to do inside of it. But really, I think what makes the self-directed solo 401k different than what you're used to through an employer that most people have in America, right? Well, most full-time people have in America. It's really that a solo 401k is considered a prototype plan. Basically, because it's only one person that's working for the business, it has all of these rules and regulations that you don't have to do these checks and balances on every single year. So top heavy testing, for instance. Um, and because you don't have all of these additional restrictions in it, the firms that provide the 401k plans in this case, and Angie and I work with to get the actual plan documents, we work with a local company to us in the Longwood area in Florida.
Mhm.
But basically, you're getting these documents, and they're just kind of hey, here's the shell that you need the plan for. Go out and do it yourself. As opposed to, again, to pick on Siemens, and I have no ties to them, never worked for them, don't know their actual 401k documents myself. But in this case, a company like that, they have thousands of employees, right? They have testing that they have to abide by. And because they have testing that they have to abide by, they kind of have to give a cookie cutter section of investments to choose from. There's different fiduciary requirements for basically 401k plans. And if you're not familiar with that term, it's not necessarily some Italian that's going to shake you down. My wife's Italian, I can say that. But basically what it is it's a requirement saying, hey, the person that's in charge of managing this plan has to do what's in everyone's best interest. So everyone's best interest, meaning the person that just started there, that's 21 years old and has never made an investment in their life, all the way up to the 67-year-old that's about to retire, right? And the issue that we come into that is, what is everyone's best interest? So they actually, on the normal 401k side, they have to put investments in front of you that are, hey, if you pick this on your own, chances are you're probably not going to get completely, pardon my French here, completely screwed over with it. It's something that if you had no idea what you were doing, you could probably make a decent guess throwing a dart at a dartboard. So typically what you see in those types of 401k plans is you see a lot of target date funds. They're really simple, right? We have to think of the average person that's maybe lower on the intellect side, right? And just realize that, we'll call them ignorant, right? They just don't know this space. And then realize that half of the people from that average person know less than that person does. So that's why you see a lot in the traditional 401k side, or the regular 401k side, of target date funds that'll say, hey, if you're working and it's 2020 and you're 30 years old, okay, you're going to retire probably by 65. So that's 35 years from now. So that's 2055. Hey, click this fund here that's going to automatically go in and rebalance stuff for you every single year between now and 2055.
So basically, what I'm understanding, and correct me if I'm wrong, is that when you're looking at a traditional 401k, it is looking right at the masses, at everyone's best interest. But when you're looking at a self-directed 401k, the spotlight is on you, right? So it's what is in your best interest as a business owner and your best interest as a human individually.
Correct, because
okay?
You
Because
are the fiduciary for your own plan, so you're taking full responsibility for yourself.
Saying I'm making the best investment for myself. I am okay.
Right.
Gotcha.
So in this case, it gives you the ability to do that. There's no reason why, again, picking on Siemens, there's no reason why they couldn't offer alternative investing inside of their plan, other than there are these legal requirements that they have to abide by. And they probably don't want the average person going out and saying, oh, you know what, I'm going to do this. It's going to cause additional record keeping for the plan as well. And then that person that has to take responsibility for the plan is now responsible for this person who may not have any idea of what they're doing, going out making a crazy, wild, off-the-cuff investment that could then come back to reflect negatively on the person that's supposed to be doing in this guy's best interest. He's the one that's responsible for it. So the way they skirt around that is they just say, we don't allow it inside of our plan.
Right.
It's all about who can you point the blame at, I guess, is the worst way to look
Always,
at it.
always. So besides looking at the benefit that a self-directed 401k points to your best interest as an individual or business owner, are there any other type of benefits that a business owner may see by starting or having a self-directed 401k, either from a potential tax perspective or anything like that?
Absolutely. And that's everyone's favorite subject is taxes, right? Everyone
Yeah. Oh, they're
loves
so
paying
fun.
them.
They're
Everyone
awesome.
loves paying them. Just
Yes.
kidding. No, it's funny. Prior to this video call, I was actually on the phone with a client who we were just having this exact discussion about what do I do going into 2021 for my taxes personally. And my first recommendation always there is, hey, first of all, call your CPA. So I'm not a tax advisor, nor do I play one on TV. And if you need a CPA, I know a great one. I have a feeling Angie does as well.
I do
Uh,
too. I have a fantastic one. So definitely reach out, and I may have him on at some point too.
there you go. I will push him for you if he
Yeah.
doesn't say yes immediately.
Oh,
But
I'll drag him.
but the answer is yes. There are tax benefits for it, and realistically, the play for what types of tax benefits really depends on how is your business set up. And everyone's a little bit different. Everyone's a little different on how they take their pay, how their corporation's actually structured. Are you a C corp, an LLC, sole proprietor, all of these things. But if I had to paint it with a broad brush, I would say that a 401k gives you the ability to put money into your retirement at a larger dollar amount than a regular IRA will be and get a larger tax write-off for it. Basically, it's taking money that, hey, I don't necessarily need to live off of this today, but if I just stick it in my savings account, well, I'm not really getting any tax break for that. In fact, I may pay taxes to put it in that if I'm going to put it into the account based off going through payroll, right?
Mhm.
But if I stick it into this 401k, I actually can get a tax deduction for it. That's kind of cool. That's interesting. I might just do that. Um, the I always struggle with remembering this offhand, so I apologize. I have my notes on my second screen over here, but I looked up the numbers for 2021. The IRS recently announced those, and going into 2021 for a 401k, solo 401k, self-directed
Mhm.
401k, technically a 401k through an employer that's a larger corporation as well. The maximum contribution you can put into it is $58,000, which is quite a bit, right?
Wow. That's a
And
huge jump, right?
right. So that's a
Okay.
huge number. So 58,000. Now that's if you're under the age of 50. If you're over the age of 50, that's actually 64,500 is what that number jumps up to. That's considered a catch-up contribution because apparently the IRS thinks the average American isn't saving enough for retirement. So that last 10-year stretch, they kind of give you a catch-up contribution for. Can't say I disagree with their basis there, but
Yeah.
that's neither here nor there. But it gives you that large contribution that you can put in. And there's a million ways to skin a cat as far as how does that actually get put into the 401k itself. But any dollar amount that the business puts in, it's basically going in pre-tax for it, right? So if your business earned $200,000 a year, and let's say you wanted to put in $30,000 into your 401k, it's going to show as if your business made $170,000 for the year, right?
Mhm.
It's going in pre-tax, which is going to save you in taxes in the short term. And then on the flip side to that, the follow-up question I usually get to, cool, we're saving taxes today. Well, the IRS doesn't let me just put money in, take a tax break, and never pay the taxes. When do I write the check to them? And it's years down the road when you actually retire, right? And you stopped working. Maybe you've sold your business at this point. Maybe because again, you're a self-employed person. This business has to go somewhere at some point. But you've gotten to the point that you don't have the business income that's coming in. I'm going to start taking it from my retirement at this case, which means your taxable income is going to be lower, which means the tax bracket you'll pay when you actually take the money out is lower at that point.
Mhm.
And the whole time the money's been in there and you've been investing it, regardless of what you've been investing in, it's been growing tax deferred.
Mhm.
So I think that's the most powerful point of this plan. All of the investments aside, If you're a business owner and you don't have some form of retirement account set up for you through your business, you're missing out on a huge tax opportunity there.
Okay. Awesome. Thank you for that. And then I heard that you can, and just to draw it out for people that may or may not know this, you can contribute both as an employee of your business
Right.
and an employer, and as the employer, correct?
Correct. And
Okay.
I'll give the first example for that. There's the percentage that I'm about to quote varies depending on how your corporation is actually set up. The rule of thumb is it's about 25% of your business's income can be put in from the business's contribution up to that limit, right? Up to that what did I say? That $58,000 limit. But let's say you don't earn enough through your business in order to make that maximum contribution. As the employee of the business, right? You're the employee and the employer. You're both. You can actually put in up to 19,500 for 2020, or 26,000 if you're over the age of 50, into that plan. So as the employee, and basically what that means is if you earned $19,000 for the year of 2020, and that's what you paid yourself as a salary through that business, you can put that full amount into the 401k. So for those individuals that are saying, well, I just started a business, I don't really think it's worth it to get this set up. If your whole goal, chances are you probably need some money to live off of. But if you're to the point that you're saying, how do I get started and put money in quicker? That's a much larger number that you can put in pre-tax, right? So I think that goes to show that if you're starting out, there's a couple of different ways to make the contributions. If we're comparing that to a regular IRA, for instance, whether it's self-directed or your traditional asset out, IRA, you're only able to put 6,000 into an IRA. So now we've added a $13,000 bump that you're able to save on a year-to-year basis. 13,000, if you did that every single year for the next 10 years, that's $130,000 more that you're saving. If we're going out 2 years or 20 years, 30 years until retirement, it just compounds to a much larger number because you're just giving yourself more options from the saving standpoint.
Yep. That's awesome. Thank you for explaining that.
Of
I
course.
appreciate it. And then if someone had a question, so let's say they're putting money in, and then 5 years down the road, they need, access to that money. Is that feasible? And if so, what does that look like?
Sure. So again, we have a lot of options with these plans, right? So there's several different ways we could go about that. The most common one with the 401k, and I think this is also a statement to a 401k as opposed to an IRA. If you have money in the 401k, you can actually borrow against it personally. Now, this assumes that you check the one box on the 401k application that says "Are loan provisions eligible?" That's all you really have to do, and you're able to borrow money against that plan for over 5 years. If you want to pay it back in one, cool. You want to pay it back in 3, awesome. But you have up to 5 years to pay it back. You do have to charge yourself interest. So notice I said you're charging yourself interest, right? It's not, it's just the way the IRS words it. And that interest rate also isn't defined. It's considered a reasonable interest rate. So that being said, rates right now, if we look at where the Fed is at, rates right now are kind of zero. I think one could make the argument right now, if you needed to borrow money against your 401k for a personal reason, you could probably borrow against it at a 3, 4, 5% rate and pay it back to yourself over that period. But I always challenge that if you're going to borrow money against it, you can pay it back. Why not charge yourself the highest rate possible? Yeah. You're paying yourself and you're putting it into a tax deferred vehicle. So that's option one. Option two is really, you can always take a distribution out of the plan if you needed to. And that's the less ideal way to do it. But if for some reason your business absolutely blew up, you have no money in any other form of savings, I'm painting an absolute apocalyptic picture here, you could blow up the plan at any point in time. And the way that essentially works is you pay a 10% penalty to the IRS for funds taken out early. And any funds that were given a tax deduction for putting in, you're basically claiming as income as well that year. So realistically, you kind of break even on the tax side of it, but there's an additional 10% penalty you pay. So the IRS doesn't want you touching your retirement plan early.
Yep. Okay. Awesome. Those are all the questions I had. I just wanted to provide an overall view of self-directed or solo 401ks. If anyone has any questions, please put them in the Q&A. Austin, do you have anything that I didn't cover that you wanted to kind of add in here?
Sure. I think that I kind of touched on this earlier where, a lot of people, they might say, you know what, I see the value in the plan, but there's a lot of talk when you do a lot of research online about these that say, you know what, I feel like I just don't know this alternative space, right?
Mm-hmm.
I'm a business owner, I'm self-employed, I'm just by myself, and I qualify for the plan, but I just don't feel confident in myself to make the investments. You don't have to go that route. Just as you don't have to go the route where you have someone like me in it. If you're the opposite of that, you say, you know what, I just don't trust financial advisors. I just don't trust financial planners. I got, burned once, a guy back in the 80s, he, sold me a bunch of terrible stuff. I get it. It's a rough position to be in, but if you're the type of person that you feel you have a good grasp on this and you can do everything on your own, you don't have to have someone like me involved. The role that I kind of play is more so I'm watching over your shoulder as big brother. I operate in a way that I'm always doing what's in my client's best interest for the money I manage. That's just the rules and regulations that I'm under. Um, but if you feel like, hey, I want to do this, don't feel obligated that you have to have a financial planner involved in it. Just on the flip side, if you say, you know what, I absolutely feel like I have to, and I feel like I need to have them for 100% on it, that's fine as well. I'm here to help those people as well. And if you're somewhere in the middle, even better, best of both worlds. That would really be the only additional thing that I feel like I would add to this, that, in the years that I've been talking about this subject, that I've been in this industry for 7 going on 8 years. I feel like I meet people more so on both ends of the spectrum as opposed to the people that, Angie, you're kind of like the unicorn that's right in the middle of it. Maybe you don't like unicorns, so whatever you want to call yourself.
I love unicorns. That's
There you go.
okay.
There
It's
you
not
go.
the first time I've been called a unicorn. I doubt it'll be the last. I've yet to decide if that's good or bad. So,
Right, right. So the people on both ends of the spectrum at least have the conversation to see, is this something that's right for
mhm.
you? I think I just saw a
Yes.
question pop up here.
So Pam asked if my business is a multi-member LLC with my spouse as the other member, but I am the only one working in the business, would both members have to have a 401k?
So that's a great question. And I kind of hinted at that earlier with and Pam, I appreciate you asking that because I completely forgot to bring that back up after hinting at that question. If your spouse is a member of the LLC, you and your spouse are kind of treated as the same person in the IRS's eyes, right? Usually you file your taxes together. Your income is their income. It gets taxed collectively as a whole. If they're also a member on it and they're considered to be an owner of the business, they can actually contribute to the same 401k as well. So they're kind of that rule, the exception to the rule rather, of, oh, it has to be a single member LLC, it has to be, just you and yourself. Your spouse is allowed. And what's actually really cool is if your spouse is also working and employed, considered a full-time employee of that 401k plan, those contribution limits are doubled. So you can actually put in a lot more for it. And I have several clients that I work with that's actually what we do for their plan. Again, that's where I pull my card and I say, talk to your CPA, talk to your CPA, talk to your CPA. But the general consensus on that is yes, they can participate. Now, if it was a spouse, you and your brother, not eligible for this plan, assuming they're a full-time person in that LLC. I hope that
Awesome.
answers your question, Pam.
Thank you. Does anyone else have any questions?
They're probably afraid that I might talk down a rabbit hole.
Well, listen, it's I'm hopeful. I know this is Pam said thank you, so I think we covered it.
No problem.
I I'm hopeful that we kept this to a lively chat because I know sometimes self-directed 401ks, taxes, all those awesome things are not super exciting for people. I I like them. I don't know. I like money, right? It's one of my daily mantras. I love money. Money loves me, right? put it out there and attract it. So hopefully we kept this lively and no one is snoozing on us, but I think this was really great, valuable information. Austin, I greatly appreciate you being here. For those on the call, please do. I am launching a YouTube channel and it is Living Inspired Within. And so I will make sure all of the webinar recordings are there and housed there as a resource for women entrepreneurs. And then if you are not in the Facebook group, I highly encourage you to be there. It's called Women Living Inspired Within. Please join us. It's a free group. There's no pressure. It's just there to support women entrepreneurs, to provide motivation, and really, provide valuable resources so we can all lift each other up and do some amazing things in the world. So we got a couple thank yous. So thank you again, Austin, for your time. If anyone wants to reach me, you can either email me at livinginspiredwithin@gmail.com, or you can call or text me at 407-676-7899. If you want Austin's information, just email me, shoot me a text or whatnot, DM, whatever, however you want to reach me, and I will make sure to put you in contact with him. He's a great resource, and we just hit the tip of the iceberg. But thank you again, Austin, for your time and being gracious to be here with us today. I appreciate it, and I appreciate your support and everything.
Thank you so much, Angie. Thanks for having me.
All right, take care. Hope everyone has a great rest of the week.
You as well.
Bye,
Take
guys.
care, everyone.
Take care.